Hello traders, I'm going to do again this midweek market focus. Today's the 26th of June 2013. What I'm going to cover today is indicators. I'm going to cover indicators in detail, the RSI, the stochastic, and the MACD. I'm gonna tell you all the different settings, all the different combinations, so that you can pick the one that suits you the best. Remember that the best indicator is the price action, right? Um, you can go into the previous midweek market focus for more reference. As the last midweek was, which I've done it myself, was about price action. You can use these indicators in conjunction with your strategy, right? These are not entry signals or exit signals. You just use in conjunction with the strategy that you're using. Right, let me just come up from here. There we go. Right, let's get started. As usual, I've got my 4 charts: daily, 4 hourly, 60 minute, and 5 minutes, and this is how I trade. I can open the daily chart up, and I've got my indicators here at the bottom. I've got my moving averages, everything. So if I want to do intraday trading, I've got the 5 minutes, the 60. If I want to do end of day trading, I've got the daily chart here. This one I go comma W, enter, and I've got the weekly chart next to it, so I can have the weekly and the daily chart. Or you can use one and change it from one to another. Right, so that's the weekly, the monthly, and back to the daily. So you click on the chart, comma the enter, and just change it from one to another. Right. These indicators at the bottom, you can have them one on top of each other like that, or you can have them behind each other like that. Right, so it's up to you. I prefer it like that. So you have to go right click, stack studies, and you can have them all behind each other like that, and you can just pick the one you want to use in that moment in time. Right. Okay. We've got the euro here, which is still looking very bearish, still going down since the FOMC, since the Federal Reserve announcement, which was on previous Thursday at 7 p.m. in the afternoon, followed by the conference, which takes place at 7:30, so half an hour after. And I was saying that um, the US economy is recovering, and obviously it's good for um, the economy in the States, and everything else has gone down. So it's good for the dollar, and everything else has gone down. Everything else across the board has gone down, including all stocks and indices, commodities, such as gold and silver, and all currencies has gone down apart from the dollar index. And still, right. Now the question is, how do we use the indicators, and which one shall we use? Right. So for example, we've got the euro chart here on the daily. Yeah. This is the RSI indicator. I've got the RSI, two different stochastics. I've got my MACD and the original settings for MACD, which is probably the one you have. Right, I'm gonna start with the RSI. RSI, you can use RSI 6 or RSI 14. RSI 6 is the number of days. RSI 6 is the one I suggest. Is probably the best one. Um, it's much better than the 14. The 14 is a bit too slow. If you're trading off the weekly chart and monthly chart, you could use the RSI 14 instead. But RSI 6 is brilliant. Um, the RSI and the stochastic are both leading indicators, so the signal comes before or while it's happening, and the MACD is a lagging indicator, so it comes as it's happening or after. It's lagging, right? That's why, well, my favorite indicator, me personally, is the stochastic, the A33, which I'm gonna cover now in a minute, right? Going back to the RSI, so you have the RSI 6 or the RSI 14. And here are the settings, there. You just need to put 6 there. Doesn't matter if you put 70-30 or 80-20, doesn't really matter. Those are the parameters, the upper band and lower band. It's not gonna make a big difference. You're gonna have a line at the top and a line at the bottom, right? That's all. Doesn't matter if it's 70-30 or 80-20. And you're looking for turning points up here in this zone, up here, and turning points down there. So it's overbought and oversold signals. Okay, basically what it's telling you that it's going to reverse. Yeah, if it's overbought, it's going to reverse. If it's oversold, it's going to reverse. So if it's overbought, it's going to be up here. So we need some sellers in the market because the market is overbought. There are far too many buyers in the market. So we need some sellers. And what the price does is it reverses. And it's actually a leading indicator because this actually turns here on this day here. Let me just put a vertical line. It actually turns from there. So it's actually a leading indicator. Leading indicator. So it turns from there. Yeah, and this one goes up a bit further and then it turns. So it's a leading indicator. It comes actually before it happens or while it's happening. Then as it turns, then obviously this is falling very rapidly. There, it's a great indicator because it's leading the market. Don't use it for entry signals though. Use it in conjunction with your strategy. So we're looking for turning points right at the bottom, so like there, down here. Price turns. Doesn't matter what the price is. If it's down here, you're looking for turning points, and then it gets a bit more complex with the divergence and convergence. So if you wait for a divergence, even better. So from this moment in time, that's when you get the divergence. So the price getting lower and lower and lower, all lower lows, and here you get higher lows, and then it turns from this day. Same thing vice versa as well. You get higher highs here, and you get lower highs there. So from this point to that point, from this point to that point, and actually this line goes a bit, oh, this one here goes a bit earlier, goes there. Actually from the peak, should actually always be from the peak. There. Sometimes it doesn't spot on perfectly, but you have to pick the highs. The two peaks, connect the two peaks, and see if it's in divergence or in convergence. If it's in convergence, they'll both be going up, and if it's in divergence, they'll be doing the opposite. Same thing vice versa. So here is divergence and here is divergence, which means it's telling you that it's going to reverse, right? Okay, so basically, just to keep it simple for now, up here will reverse, down there will reverse, yeah? Overbought and oversold. Fine, and use the RSI 6. Okay, let's go to the next one. Stochastic indicator, my favorite, and the settings are A33. 8 is the number of days, and then 33. That one. So A33, again, 80-20 or 70-30, not a big deal, doesn't matter. These are the numbers that has to be spot on, the A33. You can also use 533 as well. 533 is much more aggressive because it's weighted on less days. It's weighted in only 5 days. The A33 is obviously 8 days, so it's more days, so it's less aggressive. It's using more days, so it's kind of more reliable. Let's put it that way. So A33 there. And change the colors. Make these two colors the same because the two horizontal lines. So gray is a nice color. Yellow, put it nice and bright. I would say gray is a nice color if your background is in black. And then these two can be I've got blue and red. Good enough. Right, here's the thing. Now, one of them is going to be faster than the other one. Okay, which one is faster? Well, it's the percentage K. Let me go back again. The percentage K is much faster than the percentage T. This is all based on mathematical equation. Don't worry about it. Don't have to know it. The percentage K is faster, right? But it's less reliable. Okay? And the percentage T is much more reliable, but it's slower. So it comes kind of after. Let me show you a few examples. I'm gonna reset the page. Bear with me for a sec. Right, here we go. Stochastic A33. There we go. Right. Do you remember that up here is going to reverse? And down here is going to reverse, yeah? So look for turning points. Look for turning points up here. And look for turning points down there. Yeah, the overbought and oversold signal. Doesn't matter if it's touching, doesn't matter if it's crossing through, doesn't matter if it didn't quite touch the line, it's the zone. You can use the numbers if you want. By the way, these indicators, the RSI and the stochastics, they are actually bounded from 0 to 100, so it won't be able to go any further. It can only go up to 100, and it can only go as low as 0. It's actually bounded, so it cannot go any further than that. I'll show you now what you have to watch out for with these indicators. Right, going back to one of them is faster than one of them is more reliable and stuff. The blue one is much more aggressive. It doesn't necessarily mean that the price is going to reverse. So for example, here the blue one turns, doesn't necessarily mean that the price is going to reverse, but if the red line reverses, which is the percentage T, then the price reverses down. But by the time it reverses, it's a bit too late. The price is already 10. Okay, so you're gonna have the two lines. One of them is gonna be fast, so one of them you're gonna get a hook. Okay, and then as the other one hooks, the price is gonna be down there. See that? But as this one hooks, it's a leading indicator. It's gonna tell you even before it comes, actually. Literally, as it's happening, even before that. And then same thing vice versa as well. Same thing down here. So when it's overbought and oversold, it doesn't matter when it's in the middle. Yeah, it's absolutely relevant. You're only looking for the extremes. So when it's on the extremes, it's likely to reverse. Right, now I'm gonna show you what you have to watch out for, and also the divergence and convergence. So bear with me. I'm gonna go to another chart, Japanese yen. So when you have this sort of move, when the price is just, well, they were printing money, so this is actually not very common. They were doing QE there in Japan, and the price was flying. That's when it gets a bit tricky, these indicators. Why? Because it cannot go any further than 100. So all it does, it just stays at the top. So you're like, from here, probably, okay, this is going to reverse, and it just carries on going up. That's when you have to look for divergence. Okay? That's when you have to look for divergence, when you have to identify the last two swing highs. So example, from here to there, you might think, let me show you an example that didn't work. There, divergence here, this is going to reverse. It does reverse, okay? Then it carries on going up, so the divergence is done. Divergence is there, and it's done and finished, so it does go down. It will go down, definitely. How far is it going to go down? But because the move is so aggressive, it just goes down a little bit just for 2 days, and then it kicks off again, and then it gives another divergence there using this peak, and then it does reverse there again, and then it shoots up and it puts a new high up there. Yeah, and then it gives another divergence here, there. So it thinks that it won't be able to go any further, and it goes up to 95, and there's not much room there to go up really, and it gives another divergence there in this moment in time here and there. So it gives another divergence. Make it easier for you guys. I'm gonna go back to whatever this day was, which happens to be on the 12th of March. Yeah, 12th of March 2013, just before Easter. So there, market was flying, it gave a divergence. Do you remember that if the blue one turns, you get a hook, then it's likely to reverse. And can you see the red line? The red line is actually going flat. And if you go forward, now it's turning. Right, so the divergence is taking place there. The hasn't really gone down, but then it's gonna go down, and then that's when it really hooks down both of them nicely, and then it does reverse. It gives a low test part of the 20 moving average, and then it hooks up again. The red one carries on going down, so that's a false signal of the blue line. See that? That's why it's very aggressive, less reliable. So the red one doesn't even change at all. It kills a little bit. This is going down. They're both going down still. Going down. Now the blue line is going flat. The red line is still going down. One hooks. The other one's kind of turns slightly, not much. So you can see here, you got a hook there. So then if it actually turns to the upside, then there we go. Now they're both hooking up. Now it's more reliable for it to reverse. Puts a new low. Well, puts a new low down to the 50 and it goes down to 18. Not really hooks. It's not giving divergence at any moment in time. Not divergence. So it's not as powerful. And then one hooks, the other one hooks, and obviously the other one hooks, and then this is flying. Right, and then it goes up, up, up. One hooks, the other one goes flat. Price is running out of steam. The red one goes flat, and if it turns, then it's gonna hook down, and then it does go down from there. Yeah, one hooks, the other one goes up. They both hook, goes up. It's kind of flat. It's not putting a new high there. No new highs. Now it's giving not divergence because it's not a new high. Then it goes down. Then one hooks. Then the other one hooks, so it's going up. Yeah, so you can see that one of them is definitely faster than the other one, but it's less reliable. Less reliable, yeah. So then it goes down, 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 down. One hooks. The other one is hooking now. Puts a new low. Bouncing off the 50 moving average. They're both hooking up. No divergence there. Low test bar. Turns to the upside. Then it goes up. And that's where we are now. Okay. So that's where we are now. And one of them is hooking. Sitting there on the 50. It's not giving divergence there at all. Give a high test bar there. It's kind of giving it a bit easy decision there now. It's not looking very clear. The moving averages, they're all still pushing up. And that's the A33. If you go to the 533, it's going to be much faster than the A33. So you can see that this is already hooking down. And if you go to the A33, the red one hasn't even moved. Still pointing up. Back to the 533, you get a hook. This one's still going up, yeah. So, and here you get a divergence actually. Based on these two lows here. Lower low, higher low, tens. Okay, back to the A33. Same thing. Yeah, so they're very similar. It's just slightly faster. That's all. Right. Okay. Now, what I'm going to do is I'm gonna add. Oh, I'm going to add the MACD. The things that my MACD is different from the one you guys have, which I'm happy to share it as well. Basic studies, moving averages. Oh, excuse me. Averages. No, this is the MACD there. And then, oh, right. Okay, this is my MACD here. Pull this down. Take this line away. Right. This is my MACD. You can right. The white line, I use it as a momentum. So there's a momentum behind it that buyers in the market buying it. Since here it kind of loses the momentum slightly, so it goes up to here, uphill, and then since here it's gone down. So this one goes up to here, and then since here it's been running out of steam. Right, so it's not very accurate because it actually tends from here. From here. That's when it tends to the downside. Now, in terms of the histogram, which you can look for divergence and convergence based on the histogram, you can see that it was giving divergence here. High, slow high. So from this point, it's telling that it's going to reverse. Let's look at the other indicators. Same thing on the 533, same thing there. And here it's actually giving convergence on the RSI. So can you see that they're not exactly the same, all of them, right? This was pretty accurate, this one here. It's actually the best one out of all, the histogram on the MACD. Because here there's another little sub-cycle there, which is actually giving convergence if you connect them. Like that. It's actually giving convergence, but it's giving divergence using the previous one. And then same thing there. But on the histogram, this is definitely the peak. That's a little sub-cycle there. That's the peak, and that's the other peak. So when you connect them, it's giving divergence, and then it turns. And now it's putting a massive new low down there. And the momentum is going flat. It's just waiting and see what's going to happen to the price, and then or it kicks off, or it carries on going down. Right, the settings for this indicator, which is the white line as a momentum, and the histogram for divergence and convergence. And the settings are MACD is 520 close 30. No ticks there. Make sure you get this right. No ticks there. Tick that one. Tick the next one. And then these two remains the same. And then change the colors. This line goes much thicker than all the other ones because it's the one I use for the momentum. Okay. And then if you click on save as default, it's gonna be always save. Every time you click on the MACD, it's gonna be save as default. Okay. Now the original settings for the MACD, which I know is let me see if I remember. MACD, the original settings for the MACD. See that it comes as the settings that I've got saved here. I think it's 12. I have to double check actually. I don't know by heart. It's 12.26.9, 12.26.9, 12.26.9, 12.26.9, and then let's try to find. It's not that one. I think it's these three, I believe. Double check. So it's 12.26.9, close, no ticks, and then those two in the middle. Actually is, yeah, those two in the middle, yeah, and one tick there. Okay, so there, and then those two in the middle. Fine. So it's like that. These are the original setting that comes as default on a signal. You'll have the two lines. You'll have the two lines. You can use them as a snake. One of them is going to be faster than the other one, and you can look for the momentum. So it actually gives a very similar signal than my one. It climbs up to here, and then from here it goes down. So if I look, so from mid-Feb, mm, yeah, very similar indicator. And in terms of the divergence, from here to here, these two peaks, it doesn't give divergence. There we go. So, well, it doesn't give divergence. Well, using the histogram, it does give divergence from this point here. And using the two lines now. So yeah, very similar. Very similar. Let's see. So this is the original one that comes up, and this is the one I use myself. I just use the one line there to measure the momentum, which is very similar to the momentum indicator. And that's the ground zero. That's zero level. So it's above or below. Bullish momentum, bearish momentum. And if you go to the right click, basic studies and click on momentum, it's going to be very, very, very similar, but much more aggressive because of the settings that you have there. I'm not using indicators because I already have it on my MACD anyways. And plus my MACD has the histogram as well on top. So this is very similar. Yep, just measuring the momentum there, which I don't use. I'm already using on the MACD there. So you go remove momentum. So a quick recap. So you get the RSI 6, stochastic A33. Then the stochastic 533 is much more aggressive. It works better on smaller time frames. I use the A33 for everything. The 533 works better on smaller time frames. And then you get the MACDs, yeah, these two here. None of these indicators works well on the 5-minute time frame. Why? Because it's too aggressive. The 5-minute time frame is a bit too aggressive for these indicators to catch the price action, so it kind of goes behind and it moves very, very fast. So I'll suggest if you use these indicators on higher time frames, on daily chart, 4-hourly chart, 60-minute chart, weekly, monthly, not on the 5 minutes. Okay, you can have the day if you want, but I don't recommend you to use them. Right, so okay, these are the indicators here. Fine, I hope it makes sense. I'm just gonna move on. Unfortunately, I'm not gonna have much time to scan through the market, as I spend quite a lot of time going through these indicators with all the different combinations and settings. So now you can start playing with it, see which one you like the most. See if you prefer the RSI or the stochastic. As I said myself, I prefer the stochastic A33. That's the one I use for my trading. It works very well. I'm happy with it. I've backtested it a million times. It works. I'm sticking to it. Okay, and you have to pick one, like your main indicator, right? Although remember, the best indicator is the price action. So after the price action, I'm using the stochastic, followed by the RSI, and then the MACD. Okay, that's my order. So you need to have your preferences. It's a personal preference, the order you pick. But why do I like the MACD? Right. What I like the MACD in terms of the momentum indicator. Oh, in terms of the momentum indicator, which is the white line, and the divergence and convergence on the histogram. The stochastic is the best one for me because you have two lines. oversold and overbought, and you can look for divergence and convergence, and then hidden divergence, which gets a bit more complex. I'm not gonna get into that. And then the RSI is just one line, so it's much more simple than the other one. I'd rather have the two lines so I see the aggressive one and the more reliable one independently, and see how they perform throughout the time. Right, okay, we've got euro weakening. We had Mario Draghi speaking about the euro not too long ago. It's actually devaluating there, so we have dollar strengthening across the board. We've got Japanese yen there, which is not clear. We've got Suicida strengthening because the euro is weakening. We've got Kiwi doing nothing. Right at the bottom of the daily chart, we've got Canadian there doing nothing. It's not giving divergence, and these you can see here clearly that one of them is hooking, the other one is also hooking. So as it goes down, it's gonna have a proper hook there on the percentage D indicator. Yeah, the red line there. Although it's not giving the divergence. We got to the Aussie. Aussie's pulling back there slightly. We're still on a massive downward trend on the Aussie. So we are on a downward trend there. Looks like it will pull back a bit further and then carry on going down. And we got SEC, fine. And so I got Euro pounds. And have I got Aussie Canadian? Aussie Canadian. Have a look. There we go. Pretty expected. We've got the Aussie Canadian that gave an inside bar, and now it's giving a nice downward trend there. Pretty clear downward trend there, spot on. And we've got these indicators here which are not telling you that it's going to reverse just yet. They're both pointing up. All of them, apart from the RSI which is going flat. And the momentum on this, on the MACD, it's been going down. And he's been going down, it's kind of going flat, pushing up slightly due to this move here. So we got this one here, that as it turns, we're gonna get a hook, and it's up here, so it's getting oversold. It's a bit premature, I would say. Make it a bit bigger. Now, here gave divergence. If you see here very carefully, lower lows, higher lows, divergence, that's why it turns. Yeah. Now, in terms of the Fibonacci level, from the previous swing high to the previous swing low, it goes up to the 78.6 before it potentially carries on. There it is. Right, take your time. You're gonna print a screenshot. I'm gonna leave it like that for a few seconds. So from the previous swing high to the most recent swing low to measure the retracement. Okay, so let's go from the 100 to 0 to measure the retracement, which can potentially, or could have potentially reversed on the 38, or the 50, or the 618, or the 78.6. That's the last option we're giving it for it to reverse. And it's giving an income generator there, and the white line is quite far. So it looks to me like a good call. And what else we've got? And it's also bouncing off the 20. It's kind of kissing the 20 moving average there. Let's have a look. Very, very close to the 20 moving average, like that as well. Kind of bounce on the 20 moving average there, and it's on the 20 moving average, and it's reversed 78% of this move here. That's 100%, so it reversed 78% of this whole move before it potentially carries on going down. Okay, this on Aussie Canadian. Yeah, and the price is making lower highs and lower lows. Yep. So if you go through a checklist, it'll be lower highs and lower lows, bouncing off the 20, Fibonacci retracement 78. The stochastic is not there just yet, and it gave an inside bar there as well. Do you remember on the last midweek market focus, inside bar, this bar inside the previous bar, as it takes the low out, that'll be a nice entry there. And I think so far it's giving a double inside bar actually, is it? Uh, Maybe not, because this bar has taken the previous high out. Let's have a look. Yeah, it's not giving a double inside bar because this is actually higher than that bar. So it is not giving a double inside bar. Fine, no problem. Still giving an income generator setup, and the bar is pretty small, so the rotary ratio is pretty good, I have to say. It's only a 50 pips bar so far. The bar will run for 10 more hours, 10, 12 more hours, so needs more time. If it closes like that, or even if it gets a bit bigger, ideally a bit bigger, it's gonna give a nice income generator setup there. Although the Aussie seems to that it's gonna pull back up a bit further before it potentially carries on going down. There's a bit of a room there to go up still. Yeah, because we want Aussie to be going down for the Aussie Canadian chart to go down. But if Aussie reverses, Aussie Canadian will reverse as well. Okay, so now that is called market correlations. So we're looking at the different markets, the major and minors, to make a decision on the crosses. Right. So now I'm gonna go into stocks. Stocks being see what's been happening here. Oh, look at that. FTSE is reversing after a massive drop down. Fine. Then we got the 250 there reversing too. It's looking very bearish. Very bearish, I have to say. Put this back up here so we can see the numbers down there. Fine. So it is on a lower highs and lower lows basis. And the FTSE 350 is same thing. Let's see banks. If that reversing, bouncing off the 200. Oh, mining companies struggling big time. They keep on making new lows and new lows and new lows. Let's see what's happening here. I had to close some of my positions on stocks as the market is looking very bearish across the board. There's nothing there. Nothing there. Nothing there. Have a quick look at this one here. Nothing there. No. Next one. And obviously nothing there. Let's have a look at the 20 bounces. Might have some good opportunities to sell on 20 bounces actually. So make this a bit bigger. Safe, right. Just pick some random stocks here. Nothing there. Lower highs, lower lows, not clear. It's broken through the 20. I wouldn't be keen to sell there. No. There is a glitch there. I'll leave this alone. Next one. Barclays. Next one. Downtrend. ADX is fine. It's above 20. Volume is above 500k. According to the indicator, let's see. Almost 2 mil. That's fine. There's a trade setup there. And the question is how powerful it is. Put this down. So here is telling you the parameters. It was on an upward trend, and now it's making lower highs and lower lows, and it's telling you to sell as it touches the 20 moving average with a stop loss above and a target below. Giving nice bounces there. Big sell-off, fine. And that's where we are now. So if the market continues making lower highs and lower lows, it's gonna give some good entries on the 20 moving average. Now the question is it really a downward trend? Uh, if you want to be more cautious, wait until it breaks through this low. So wait until this one triggers, goes down, puts a new low, that takes this low out, and then pulls back, and then there'll be a sell there. On a 20 bounce, yeah? You enter on the 20 moving average itself. Right, so have a look at that one, see how it performs. British Land Company is actually on, let's see, yeah, this one here. Let's see what else. Oh, look at this, let's have a look. This is more clear that it's going down. I don't like where the market is gapping, but it almost gave an entry there, just about. It's making lower highs and lower lows. When it touches up here, the 20, it might give an entry there. He was giving 20 bounces to the upside. Nice 20 bounces there to the upside. Make sure the market is trending nicely before going for it. There. Right. Kind of bit choppy there, messy. It's not really going anywhere. Here is actually following a bit of a pattern there. That's better. This move here normally gives 2, 3. Well, on the daily chart, it's gonna give more than 3 or 4 bounces. It's gonna give like 5 or 6 bounces before it ends. So you're looking to catch quite a few there, and it will last for a while. It will last for a few months there, even half a year, giving bounces there, giving only 4 or 5 bounces because it's on the daily chart. Okay, now you click on the right arrow to go back to the latest price, and that's where we are now. So if the price carries on making lower highs and lower lows, you're gonna have opportunities there to sell on a downward trend. Make sure it's bouncing nicely off the 20 moving average there, and the volume is not bad. It's 2 mil, so that's good enough. Okay. Make sure this strategy works on a trending market. All right. It's a bit all over the place. Burberry. Nothing there. BT. BT's been going up for a while, giving 20 bounces over and over again on power plays. I was actually buying BT, for a while, being in and out, in and out, in and out. Got the channels there. Copy and paste, put it up here. So you got some nice channels there on this chart here on BT Group, and it's not quite making new highs. Make sure it makes high highs and high lows before going for it. So I would say that it makes a new high first before buying it. I wouldn't buy it here because it's not making a new high. The highs are getting flat, so make sure you have found a clear upward trend there first. Okay, so high highs and high lows, which is the first point that you have to go on the checklist, and then as it pulls back down to the 20, if it's clear, look for price action. Remember, high test bars, low test bars, inside bars, doji bars. Look for price action as well, and then trying to catch the phase one going up with a trend. All right, I'm gonna leave it there. I hope you guys enjoy the indicators part of it, and as I said, play with it, see which one suits you the best. Make sure once you have it all in place, click on page save page, so you save your indicators there, and write the settings for all of them elsewhere, so you can have a copy of it in case you're going to be testing them for the next couple of months. See which one you like the most. All right. Um, I'll be doing the one in 3 weeks' time or so. Um, Feel free to ask any question within the next 24 hours. Well, from 6 onwards. Uh, and I'll catch you all soon. Cheers there. Bye now.